Alright folks, welcome on back here to the Diagnostic Trading Hour right here on TFNN. Don't forget you can check us out with live trader commentary, 9 hours of live trader commentary each and every day at Tiger TV over on TFNN and live in the E-Signal platform. And also you can listen to us on your mobile phone at tfnn.mobi. Well, let's check out where the markets are at and give you your daily market wrap. Right now, we got the S&P is up 4 points. The Russell is down 3.8. NASDAQ currently up a little over 7 points. The Dow's up 45. Looking at our metal markets, we're going to have copper right now. Copper is up nearly 3% on the day. And so nice, massive move right there in copper. Don't forget, you can trade copper on Nadex. And not necessarily my favorite on the spreads due to how they tick. I mean, not bad for small accounts. There's lower risk, though. Just smaller profits with that. But you can also trade on the binaries. And hopefully they'll be releasing updates on the intraday binary strikes. I submitted a big proposal to them, and they implemented that proposal on 8 of the contracts so far. They're supposed to implement it on all of the contracts over the coming months here. And so that's been really nice, been able to make it make it easier to find contracts to trade that have an actual decent premium on them, and also at least easier than before. And also has made it to where there are contracts available more often, like on the Russell. So those of you who may have tried to trade the Russell on the binaries but found that you couldn't find a binary contract, things have changed. They've expanded out those quotes. They've added 15. Now they have 15 strikes on there. And so definitely make sure you're taking advantage of that. Let's check out gold and silver. Gold right now is just down a couple points. Silver's up almost 0.5%. Looking at our energy markets, we got natural gas right now is down 1.5%. We got oil is up about 39 cents on the day. Going into the ag markets, we got corn is down 6 points. We got soybeans down 14. So both the ag markets are moving really nice today. We got in our energy market, not energy, Forex markets, we got pound is flat. So literally unchanged, zero on the day right now from settlement. We got the euro dollar is down 30 pips. The euro pound's down 34 with the dollar CAD currently up 10 pips on the day. The dollar franc up 23 pips on the day. Dollar yen is up 46 pips. Pound yen is up 90 pips on the day. So nice move right there. Pound yen, one of my favorite pairs to trade. Looking over at the euro yen, it's up 21, and the Aussie yen is up 44. A couple other markets we should go ahead and have on our list is the dollar index futures and the 30-year bonds. So we're going to go ahead and add those in to our daily market wrap. And we got the 30-year treasuries there are down just a little bit right now, not much. We got the dollar index is up 0.178. That's about 0.25%. And a lot of people don't know what dollar index futures are, I found out lately, which surprised me. But, you know, if you're a futures trader, if you want to trade Forex, I mean, one of the smoothest, best things you can trade, in my opinion, is the dollar index, King Dollar there. And it's nice for new traders as well and experienced traders. You got, you know, plenty of volume. I mean, it's not that it's massive, but I mean, you know, there's enough to, you know, play some trades on it. And what I like about it is, again, that it's really smooth. And like I said, if you're a newer trader, the actual tick size. So let me show you this contract just in case you're new. Let's go in and let's see if we can find some information on it for you. And let's see here. We'll go in. We'll look at the markets. And we'll see if we can put the different pieces together, okay? And I'm going in right now, trying to pull up some details on it for you. But, you know, one thing, maybe some of you I know out there, you know, you use Ninja, you use every platform, you know, they all have their benefits and different details. One of the nice things in Ninja is you can go over here, you can go to your instrument manager if you want to learn about a contract. Type in the symbol, DX. It'll tell you what it is. It's the future US dollar index, but you can go to edit to get even more details. And right here, this is actually the link I was looking for. It'll tell you the link on the exchange to find out more about it. So let's see if that is accurate or not, because, I mean, they may not always have the accurate link on there. I want to see 194. Okay, so I don't think I had 194 in my link that I copied over. But we'll see if they have that. Yeah, they need to update their link. And let me see if I can find it for you. So they're on the ice, so that lets you know where it trades. It trades on the ice, okay? Full point value right there, you know, $1,000. But let's get a little bit deeper into it to show you more what I mean by how even as a smaller trader you might be interested. So I'm going to do, we'll go over here. Let's do the ice.com, and we're going to do DX. All right. So products, ICE, see if that one brings it up. This actually may be the main one we want to look at. Well, that's June 2012. That won't do us any good. And let's see, maybe this will do it. One of these ought to do it. There we go, 194 futures, U.S. dollar index futures. Okay. And this is current, August 20th, 2014, so that's obviously good to have. One contract, $1,000 index value. And a quotation, the U.S. dollar index quotes in 3 decimal places, 0.010 is $10, but the tick size is 0.005. So what that means is each tick is only $5. Okay? So if you're looking for a smaller future contract to trade, and you also want to take advantage of FX, and you want something that's a little bit smoother, you could definitely check out the U.S. dollar index futures. And maybe I could even pull up a couple charts for you. We'll look at it. And let me see here. I got to close that down and out of the way so I can open it up. Cancel that, cancel that. There we go. So $5 a tick. Okay. And now let's get a chart up and go into DX. I ought to have that on my list. There we go. The NIBOT or ICE. And we'll pull that one up. Just a, another little expand your learning. It says don't have deviation levels on this currently, but we can go in and you can remove the deviation, you can remove the deviation levels, and we can have the average deviations and the average deviation levels on any contract that is currently not available. Okay? And let's see what else we got that we could do here. Maybe I know I got one of my other traders. Let's see, they're saying they got something up because I don't see it there. Okay. So right now, I mean, pretty quiet on the day. So there's a small day. I'm trying to tell you how good it is and how smooth it is, and the thing's barely moving. But let's see here. What do we got? There's not a whole lot happening at the moment. But you can see, I mean, see, basically, here's what I'm trying to show you. Let me show you this trend. Okay? Like right there. Okay, it is trending up. It's not that it's just flying up, but it's trending up. It does a little pullback right into it, which is a perfect example of a pullback. And then it just takes off and goes on up. And then it does another natural pullback on it. And, we get a nice solid trade right there. So, I mean, just lots of good trades lining up, just smooth trends. Thing is, to me, it's not incredibly choppy. See, it's just going up, going up, going up. I mean, a very clear trend. Then we got, right now we're in sidewards markets. We could pull that out maybe to 10 minutes and look at it. Also, let me see if I got another chart over here. Yeah, so basically same chart is what I have up. But there's a 5-minute for you. We can also go back. Let's look at 10 minutes. Bring that up. And we could even look at some potential moves over here on some trades. We got 10 minutes. I got to change my expected volume. We can just let's just get rid of the 5-minute expected volume on here because we don't really need it if we're on a 10-minute chart. And we can get rid of the 15 as well. Again, we don't need that on a 10-minute chart. And let's add the MVP to it. Okay, so it's momentum volatility prediction. And so we have that in. Give that 1 second for it to load on up. And then one thing that I like to do is I'll back way out and I'll see, are 70% of my days hitting a 1 deviation level? I can verify that they are. So if they're not, then I can make an adjustment, but I don't need to. We're getting 7 out of 10 hitting 1 deviation, so they're calling it. There's an adjustment in here on the average deviations where you can change the percent. Let's see, right, where is that at now? We're always making updates. But let's see, let me go to the average deviation, and it says a multiplier right there. You can make that multiplier smaller. So if you need to make it smaller or larger to make sure that, basically on average like 7 out of 10 days, making sure they're hitting that one deviation. But it looks like we're getting pretty solid. That blue line is what you're paying attention to, and they are. So the indicator is doing its job and doing it well. All right, so going on back down, we'll look at this again on the 10-minute, and this is using the simple MVP strategy on it. And let me zoom in a little bit further for you. But you can see we got a little bit of a short going on right there. It did break down below it finally, but it wasn't much of a move because we've been choppy all day. So it's not that it hurt you, it just didn't do anything. But look at this last nice uptrend, just going, going, going. We can back on back further. We got more moves happening, and it's on down the list. Got you in a lot of times early in the morning. So some of you early AM traders. Night pretty flat looks like right now, but again some nice early, like right out of the gate, 8 AM. Caught that entire move up. So you're talking about 0.6 of a deviation, so about 60% of a deviation move caught on that single trade, maybe a little bit more than that. And of course the expected moves are also working well. See, that MVP did not fire off. That MVP was neutral because it was a doji bar, so it didn't give it up or down close. One thing to always look at, don't get tricked by those colored bars, those greens and reds, okay? So a lot of times dojis will show the same thing. Don't get tricked by those. Look at them and see, is it actually closing lower than the open? Is it actually closing higher than the open? To get that confirmation, like that's a down close. Cool, we can go short on that. We get a nice short move right down to the bottom of the expectation on the hour. Take your profit, don't hold it. That's a good trade, or at least at the very least tighten that stop up. Okay, so if you're trading these underlying futures, that's $5 a tick. And we go in there and go, okay, well, what would that have meant? And it's a pretty nice trade if we just take it right down to the expected range. 0.060, well, at 0.005, that's 120 ticks. So not too shabby. And I'll translate that into dollars for you when we get back after this break. Stay right there. All right, folks, well, I'm back here to the Diagnostic Trading Hour. So again, just going through a couple things with you today on a few futures that we don't talk about as often, but are just as noteworthy to trade. I want to go over and look at, like I said, DX right here. So DX, $5 a tick. You get 60 ticks. So that's a $300 trade in less than an hour. That's an early AM trade, granted you. But there are plenty of those trades where you see the market's moving on down. You trail in the stop here and goes on down. Or, you may make it where if it goes so far, that's your trade. You can also go in, you can check out, we can look at momentum scalps on the trades as potential trades. And, there's a lot of different ways to look at a bunch of these instruments. Let's see, let's look at a couple other instruments because I want to get you a little bit of a list. But that's one list where you can check out. And you can pull up different charts. And, you may have to play around with it. It's an instrument that I haven't pulled up as much. But something that definitely worth if you're looking into futures, you're looking for lower cost futures. Maybe you're looking to scout, maybe you're looking to trend trade. A couple other markets. One that let me show you something here. Something to always check that I want to give you over here. But if you go to File, New, make a DOM, just open a DOM up, okay? And once you get that opened up, I'm gonna have to make this one smaller. Here, give me a second. Let me switch over the account, and I'll make it smaller for you so I can actually fit it on the screen here because I keep my DOM pretty big. And change one more setting. There we go. We got that off. All right. So you can go in and we'll go to our properties. We'll go down here. And instead of having 40, let me just make it 20 for the moment. Make it easier to fit on the screen. Click OK on that. And now let's go in here and we can choose the dollar index futures. I gotta use the static superdome figures. Okay, hold on. So File, New, Static Superdome. There is two DOMs, by the way, inside of Ninja. Okay, one of them is a static DOM. One of them is a dynamic DOM. And what is the difference, and why do you care? Okay, well, the dynamic DOM, the prices move on the chart. It can really jack you up when you're trying to trade. Okay, whereas a static DOM, stay there, and then you can just realign it, because it'll really, what I'm saying is, like right here, if I go in and I try to put a trade on, it'll really mess me up if this thing is hopping up and down, because I'll try to like adjust my trade and I'll end up like placing another trade. Okay? And you don't want to do that. So, but you can see right here the bid-ask spreads are narrow. That was the main point I wanted to show. There's plenty, several hundred contracts. That's plenty for most traders out there. And that the bid-ask spreads are narrow. Okay? We can go over and look at, something like the bond ZB here. See, obviously, like 4 times the liquidity, and extremely narrow bid-ask spreads as well. Looking over at ZB, let's check it out. Okay, we'll bring that up for you. Pardon me. And so on this, and we're looking at all the fun little things. It's sort of weird on bonds, especially if you just finally got used to futures, where things are ticking in quarters, which was a new concept to you, or dimes or nickels or pennies, which is pretty easy. You go over here, they tick in 1/32 of 1 point. Okay? So I know that's really, really strange. But the bottom line is the minimum price fluctuation is 1/4 of 1/32 of 1 point. Don't worry about trying to wrap your mind around that, okay? Just go up and down the price chain, okay? A tick is a tick is a tick, okay? Don't worry about what it ticks in. But use a DOM to help you out with that. Understand what the ticks are so you can do the calculations. That gets a little bit interesting to do it. But anyway, so a minimum right there, you got 7.8125 per contract. Okay, so you get basically $7.80 a contract. So I know it's a little bit weird, but it's not a full $10 or $12.50 or $25 a tick contract. So it's a little bit smaller, and there's a lot of movement, and they're extremely liquid. So again, it's an easier contract to trade for some of you newer traders out there that may not have the account size where you don't really have any business hopping in contracts that have, 10 and 25 and dollar per tick contracts, because your account isn't there yet. And it's not to be mean or say that. I'm speaking from my own experience. I traded in those contracts too. And your goal is to survive long enough and make some money and let your account get bigger. And as your account gets larger, then you can trade in the contracts with bigger tick sizes. So we'll go over a few more contracts and open up a few more things here that you may not have known about when we get back after this break. Okay, so again, what I was going to talk to you today about was finding futures or ways to trade futures that have smaller tick sizes. Now, you have the outright futures, like dollar index, $5 a tick. Okay? You got NASDAQ, you have Dow, even have mini oil. But I also want to show you future spreads, because that's where I'm going in on the smaller tick values. So we'll come back to that in a second. Let me go over to, let's see, I don't even know if I have it in here. Let's see, oil's on October now, right? So QM, 14, am I right on that? It's been a while since I've traded any kind of minis on that, so give me 1 second, I'll just add it into my instrument manager. And I said it's been a long time since I've even looked at it. It is QM, so I don't know why it wasn't adding it for me. Making me second guess myself. Alright, so now that I've added that on, I'm going to double check it. My instrument manager, got that done. Got 1014. Okay, good. All right, let me close that out. And then let's go up here and let's trade this, and I'll show you the spreads, or what spreading is. And it's a really cool way, something we'll start talking about more. But this is QM. This is mini oil. Okay? Mini oil, very small contract size. And so if we go over here to CME, we can go over to the energy section. We can look it up, and there's QM. Okay? And if you look it up and go to the contract specs, then what you're going to see on that is where do we got it? I know what it is, but I want to be able to show it to you too. Let me open it up a little wider here. Okay, it's ticking a little bit differently. That's one thing to get used to on mini oil. It ticks in 0.025. And I will tell you personally that when I used to trade QM, I traded it based on CL. So I looked at a CL chart, but I used a DOM on QM just because I wanted that clean 0.01, not where it's ticking in 0.025. Instead of ticking in 2.5 cents, which is what mini oil does, ticks in singles. And so I actually traded. I looked at CL for my charts to make sure my charts were clean, and then I just put my trade in over on QM, even though it ticks a little bit differently. And you can see that as well on the DOM. You'll see how it moves in 2.5 cents per tick. And it's 500 barrels instead of 1,000 barrels. So instead of 1 point being worth, $1,000, 1 point would be worth, was it 10 times 100? So it'd be $500. And that would make every tick half that size. I'm just trying to see if they put it in here or not, because it doesn't look like they even put it on here for their get minimum fluctuation of 0.025. So I guess you just got to know. It's not very helpful, is it? And let's see if Ninja helps you on that. I'm trying to show you ways to easily find this information out, but the exchange, it's like this whole code you have to decode. I remember going through this years ago and mapping out like 120 different futures just to see what all was out there. Let's see what Ninja puts in on theirs. Yeah, they got point value $500. So another way to calculate that out is if you take $1, okay, and you divide it by 0.025. Okay, that's 40. So we take 500 divided by 40, or 400 divided by 500. There we go. Yeah, it's not showing it either. All right, so I'll pull that up for you in the break. I'm sorry, I thought it was going to be really easy to pull it up on the exchange website for you, but I wanted to make that super easy and give you the math on it. But it's a really small tick size. It's easy to trade, and there's different ways to trade, oil and mini oil and all that stuff. But so the biggest thing that I want you to check first is before you even worry about what a tick value is worth. Okay, when you're going through and you're looking at all these different futures, make sure you go through and look at just the bid-ask spread. I mean, obviously, mini oil is not that liquid, but it's liquid enough for a newbie trader, doing like ones. I mean, I wouldn't be going in and doing like 10s and 20s. There's no point to do that because you'd be paying double the commission, okay, because it's a mini oil contract. But if we go over here and look at like CL versus QM, you're going to see, there's not a whole lot. I mean, there's a little more volume on it, but the liquidity is just a little higher, but it's worth, twice the amount, okay? Now, let's see, some other things. So we got that, and I have a whole list of them. I had to pull my list up. We'll just do a whole show one day on small futures. But the other thing I just wanted to get to you on when I was starting to talk to you about the bonds, and I got a little off track there. Imagine that. We got ZN, we got ZB, which by themselves have larger tick sizes, but not when you spread them. And this is a new concept for a lot of traders, is spreading futures. Now, if you're using eSignal, which I'm starting to figure out that platform and get back into it. I used it years ago, and I finally got another account, and I'm going to get back into it, and because I want to show this to you on one show, where you can actually chart out the spreads on it, and we'll do that. We'll do that here in the next week. I'll get in there and I'll dig into it and figure it out, and we'll start talking more about them. But it's pretty cool just to be able to go in and place different kinds of charts up. And let me see, I know Thinkorswim's added a mode as well for doing stuff like this, but let's see if they have it still. I know they've actually added like spreading ability and everything, but you can do what's called spreading futures with a very low risk, much lower margin. And let me find up on CME. So, you go in and you're talking about, hey, if you're a big boy, you can handle the $10, $15, $20, $25, $35 per tick contracts. But if you're not, you got to figure out, if you do want to trade futures, you don't have $25,000, $30,000, $40,000 in your account, what can you trade with smaller size? Well, there's two ways to do this. One, there's the outright contracts, like we've talked about, that have like $5 tick sizes. And then there's the spreading contracts. I know Andy Heck talks about this more too as well. But it's where you go in and you buy 1 month and you sell another month. So notice like right here on, this is, I want to say, yes, ZN, so I got the 10 years. It's $15 a tick, but you can go in and you can spread it. This is the inter-month spreads. It's where like you buy a front month and sell a back month, okay? And there we go. So all sorts of good stuff right there. But so it's really about like going in and spreading out the months. And you can go on to CME. This is obviously it's a helpful website. You got to figure out where to go, and you got to play on it for a while. But they got a margin section. You go to that margin section, and it'll bring it up for you, and it'll say, what's the maintenance margin and the interest rates and how much money you got to put up to place a trade. And you can also notice the margin's actually pretty low. But let's see, 10-year Treasury notes. We can go to 30-year on this and compare that to something like oil. And that's not going to have it on here, of course. But anyways, but you can look at 30-year. You can look at the 10-year, the 5-year, the 2-year. There's all sorts of ones. 10 and 30 are like obviously highly, highly traded. And we can go to what's called intra. Okay? So intra is where you're going to go in and you can start, mixing and matching different months. You have inter-commodity spreads. So that's like, this contract versus another contract like Eurodollar futures. It's a common one, the 10 versus a 5. So it's where you start mixing up different ones. So, but the intra-market spreads, and I'm trying to see if they'll put them on here. They got like ABAs and everything else. That's where you like buy a front month or, you're short a front month and long a back month or vice versa. And you can look how low the margin is. So really, really low margin if you start learning about these inter-commodity spreads or intra-commodity spreads. So some cool ways to start trading futures that you may not have ever been aware of that can really lower your maintenance requirement and really lower your tick size value. And so it's a cool way for newer traders. It's more advanced because you're mixing up contracts. So you need to have an adequate charting platform that will do that for you. But it is better for you on the how much money it's using in your account and what the tick size is. So I know that's not just a perfect, easy lesson right there. I was hoping it'd come out a little bit smoother than that today. But if nothing else, if it just gets you thinking about how there are different ways to trade markets, and there are markets with lower, maintenance and margin requirements. And these are, ones that you have to when you're holding on. So even ones that you could hold on, longer, because some of these trades can be really long. But you can see how low the margins can be. The ticks can be really small. So this shows like a 1-to-1, a front and back month right there. So $400 maintenance margin, your tick size on the U.S. Treasury bonds, I want to say it's like $7.80 on an intra spread where you're doing a front month versus a back month, okay? So you could buy a front and sell a back. You can lower your maintenance requirement down, and you can cut your, your tick value down by a pretty large amount, by about, I want to say 25%. Of what a normal tick size would be by buying the front and selling the back month. So pretty sweet how that works. Let me go back over to the 10 years. Let's see if maybe I just missed it. Did they have it? There's the AB. So AB, front month, back month, and start period, end period. They put all the contracts in basically when this margin requires. So, but you're really talking about a $300 maintenance requirement. Now, you do have to get in on both sides, so you do have to have enough money to be able to open it up, but you got to be able to have day trading margin on most accounts. That'll allow you to easily get into those trades. And there are sometimes you'll find the spread contracts. There's actually spread futures where you can buy the spread. Those are not usually near as liquid. I don't recommend them. It's a lot easier just to do the two different legs, in my opinion. But anyway, so that's something to open your mind up to is called future spreads. And this isn't spreads on Nadex, even though I love spreads on Nadex. But it's just another way to trade futures to lower the amount of money you have to have in an account so you can trade a smaller account. Usually it's a smoother market. Even something like, let's check out, I just want to go through as many examples as I can just to, I love to open your minds to new ideas. Let's hop over to ags because this sort of cracks me up. We'll go over to soybeans. We'll go to margins. Okay, so we're putting like $3,000, right, on a soybeans contract here. And we go back and we can look at the contract spec size, $12.50 a contract, okay, per tick. That might be a little steep for you, okay? For every quarter that the soybeans move, that's $12.50. Let's look at, what the soybeans did today. Well, soybeans right here, they moved 14 points. So you're looking at $50. That's, what, $500, $600, $700, $800? So depending on the ticks are moving right there on us. But 150 plus 5, so yeah, it's about 650 was on the current move on soybeans today. That may be a little steep for your account. So what can you do? You can go in and start doing intra-market spreads. We go in here and we look at the front back month. You got $400 maintenance requirement. That's actually holding the contract, okay? And the tick size is, smaller as well. And it's just basically they don't expect it to move more than $400 in a day. And again, that's front the back month, short the, or long the front month, short the back month, or vice versa. So if you're going long the spread or short the spread. But it's a cool way to trade. It's something you definitely want to demo, want to get into. There's all sorts of seasonalities. One of my dream engines that I want to have built, I haven't got to it yet. I got so many projects. I got 3 full-time programmers always working on stuff. But is to make a actual seasonal spread engine. Every one of them I've seen out there on seasonal future spreads were built by people who don't trade. They're made by people who failed at trading. They don't have the stuff that matters. Like they'll show you, yeah, if you buy this one and sell this one, man, it's 100% or 95%. You're like, oh, that's amazing. I want to do that. And you go and look at it, and it's like there's one contract trading, or the exit date is like 4 days past last trade date, a day before last delivery date, things like that. And so obviously, they don't build in the reality of what's the open interest, what's the volume, what's the entry date? Is it when that contract's rolled over? Is there even enough liquidity to put the trade on at any kind of size? So there's like about 40 different parameters you need to scan through to look at and see if it's a really good seasonal spread. And I've never seen anybody cover all of them. I started at one point. I made this massive Excel sheet. It's like 20 gigs. And it was doing a lot of it for me, but I mean, it literally just killed my computer, even with my big trading computers. And so I'm like, okay, I got to upgrade this thing and get some programmers in on it. So that'll be one of my projects coming up over the next 6 months, is to make a seasonal spread future engine where you can go in and find seasonal statistics on entry and exit dates on any kind of spreads. And we're going to do intra spreads, and we're going to do butterfly ratio spreads. We're going to do intra-market spreads. And so we'll just keep adding more and more and more, but adding in all the factors that count: open interest, volume, just all the different reports, the COT report and everything else that you need to be looking at, and try to get all that data into one simple place to make it a super simple engine for trading seasonal spreads on futures. And they're trades that can literally, you put them on, and especially for the trader who's busy, some of the trades, we'll be in and we'll be out of within a matter of weeks. Sometimes we'll be in and out within a matter of the same day. I've got into seasonal spreads and got out of them an hour later, and they were a 4-month spread. It's just we got to 80% of we got to hit like our average. What you go do is you go over the last 30 years, this spread made an average of $1,000. The most it made was $2,000. The most it lost was $800. Okay, and it won 9 out of 10 times, over the last 30 years. And then you go, okay, well, if my average is 1,000, then I probably want to take profit at 1,000. I don't need to go for that 800, especially if I can keep my average loss, at, let's say, a 1-to-1, 1,000 on a, high win ratio there. And so sometimes it'll just pop up and it'll hit that because so many people are trading these seasonal future spreads that everybody gets in on them. Boom, they pop up, and really quick. And I've got in them, and literally, minutes later, hours later, and sometimes days or weeks. I'm planning sometimes for months on these trades, but they're really simple trades. As you see, they don't tie up a lot of margin. The tick size is manageable, and it's just it's a cool way to trade. It's just all the homework you have to do is a little bit more challenging. And now that TFNN is broadcasting inside eSignal, and eSignal has, like, in my opinion, the perfect spread charting platform, then that sort of renewed my interest. And now that some of this quantitative easing stuff is getting out of the way, some of the seasonality stuff is going to be a little bit easier, and let the markets be the markets, hopefully. That's probably a big hope, but hoping. And I don't know, just like I said, I want to introduce some new ideas to you. And let's see here. So we got DX, we got oil. I know a lot of you traders out there like to trade oil. You want to trade oil, but you probably shouldn't be playing in the $10 tick sizes at this point. So, check out QM. Now, I got a trader that asked me, what about, like the FX, like the mini FX and everything. So,
summary perspective should be.
Well, we'll go back into that in just a second. But let's see here. Got a little interruption there on the commercial. So, like M6E. Well, let me show you M6E. Let me show you the problem with M6E. Okay, on trading something like that. Let's see here. Let me add that to my instrument manager. It's a lot easier if I do it that way. And we'll pull it up. Be right back. I don't know if we're going to break or not. I keep hearing music. So let's see here. Are we going to break? All right. And we got that one up. And add it on. All right, we're going to break. I'll be back with you after this. I'm just trying to figure out whether we're going to break or not so I don't get interrupted. We'll be right back. All right, folks, come on back here to the Diagnostic Trading Hour. I had a trader request that I pull up M6E in the DOM there and look that up. Now, let's go ahead and pull it up. So you can see the spreads are about 1 to 2 ticks wide. You can compare that over to a 6E contract, okay, which they're going to be about the same. So the bid-ask spread, now you notice we're having about 100 to 150 on average. If we go back down to M6E, then we're going to be, we got maybe a couple big hundreds there, and it's probably keeping it locked in between that rate until the Fed minutes come out here at the end of the hour. The one issue you want to think of when you're trading those is what your commissions are, and comparative to your tick value on that. And they're $3.24 round turn. So it's not that that's, I guess, just horrible, but obviously it's not great. And so just, obviously it does make a smaller tick size for you. And so that would be the one reason people do it. They want to trade over on the future side. And so if we go over and look at M6E, we pull them up, and we go down to the Forex. And then we scroll on down, we find the, let's see, let's give me the E micros, give me M6E right here, and we'll go to contract specs. So none of that, we see they're $1.25 a tick. So you're paying $3.24 a round turn on the contract to be able to trade that. Okay, that's pretty expensive. You're giving up quite a bit. So just keep that in mind. Now, I'll tell you another thing is, you can chart them either way because really they should be the exact same. But again, even when I trade a micro, I still like to trade looking at the contract. But let's see what we got. And it looks like it may be inverted. It says USD Euro, so that's sort of interesting. But they're not quoting that way. Anyways, see how it says minimum. Oh, because it's doing the FX for you backwards in the conversion. So 12,000 euros, 1.3, $1.25, all that fun stuff. Okay, so they try to make it simple for you. I haven't traded the micros. It's actually impressive that they got the tick sizes down, the spreads down to a couple ticks wide. So that is obviously a choice for you, where you could go in, and that would be, you could look at the micros on Forex. I still like looking at, because the volume, the heavier volumes in the major contracts. So even if I was trading micro FX, I'd like my chart to be of the futures, like the 6E futures, and just so I can get the advantage of that on there. But also consider, you can do 90 cents a contract, $1.80 round turn at $1 a tick, versus paying $3.24 a round turn on a tick if you trade on Nadex, just doing the at-the-market spreads. And so that might be something you want to look at if you're checking out mini FX futures. Maybe trade the mini FX future contract, the spread contracts over on Nadex. All right, y'all have a great day. I'll catch you tomorrow.